Hey traders, I just want to bring your attention to the Aussie dollar on the daily time frame. As you can see here, we're in an upward moving trend, a very gradual mind, and it looks like we are in a phase 2 retracement prior to, if price is going to do what it's done before, come back to this horizontal level or indeed this vertical level of support. So we've got some space, i.e. potential downside action to be taking advantage of. And what is interesting is, granted there are waves within waves and patterns within patterns, we do have a very interesting opportunity to sell the Australian dollar versus the US dollar. And this is off the back of a pullback in the middle of a downward trending phase 2 retracement. So I know we talked about the day before yesterday being an opportunity, closing as a bearish pin bar reversal here. But yesterday took out the high of our bearish pin bar reversal on the 13th. So that invalidated the setup. However, the setup is still valid itself, because what has happened is that we actually do still have a bearish pin bar reversal rejecting the 0.618 Fibonacci retracement. We still do have the context that we are selling a phase 2 within a phase 2. We still have the previous swing high, swing low at 0.618 as well. Okay, there we have it. So if you go down to the 4-hourly time frame, you can see that we still have our ABCD pattern intact. If we take point A, B, C, D, we draw a Fibonacci projection from point B to A. You can see that by and large we're still 1.272, or even if you want us to count the spike, 1.618 extension. Okay, so that is quite a good confluence of reasons to go short. Do we have bearish reversal divergence on the RSI setting 6? Yes, we appear to do so. Okay, so whilst price action, if you can see here, has made a higher high, there we go, based on day before yesterday, on the RSI setting 6, we do have a lower high here. Okay, so that's a sign that the bears are creeping into the market. So what we're going to do is, as we've deleted our orders for the day before yesterday, given that its high was breached without triggering us into the trade, we are just simply going to place our orders below yesterday's low, below the low of this buyer bearish pin bar reversal, stop loss above the high. Sure enough, the reward to risk isn't as good as what it was of the previous setup, but the actual setup itself is still valid. Okay, so let's have a look to see what the reward to risk could potentially be. Stick our reward to risk shooter out. There we go. So 2 to 1, risking 1%. So if we're risking 2%, that could potentially be 4% if it hits target. Of course, there's plenty more downside to be taking advantage of if we are ultimately targeting this level of trend line support here. 3.8 to 1, and that's only risking 1%. Okay, so like I mentioned earlier, to take advantage of this opportunity, we're just simply going to place a sell trade at the low of yesterday, stop loss above the high, and leave it. If we're not triggered into the trade, we delete it. If we are, then we will let it run. Okay, so that is Aussie dollar.